All right, that is the word from Janet Yellen, and it is on the back of this that we saw that rally come through in the U.S. markets. But let's also listen in to Aswath Damodaran of the NYU Stern School of Business as he speaks on the banking crisis and the expectations from the Fed later tonight.
What happened at Silicon Valley is a perfect storm. It's the collection of macro forces with interest rates going up significantly and risk capital going to the sidelines that effectively brought the bank down. The one thing that Signature, First Republic and Silicon Valley Bank share in common is they're a little unbalanced as banks. I mean, with Signature Bank, it was the dependence on cryptos and wealthy real estate developers. With First Republic, almost 70% of the deposits are uninsured. They cater to a wealthier group of investors. Their wealth management arm is very strong. So I think what this is a signal that if you have an unbalanced bank, a bank that's grown by catering to a segment of the market, it's more exposed than a more balanced bank. Notice how much the entire attention of the market is shifted to what the FOMC will do tomorrow. I think by giving that message, we've essentially told not just banks, but all players in this game that the Fed can keep rates wherever it wants it to. That's what led, I think, to the decision 2 years ago to take all those deposits and put them in long-term bonds. I mean, this was the duration mismatch made in hell. But the way I think banks comforted themselves was they said the Fed will never let the rates go to 4%, as if the Fed can actually control rates if inflation takes off. So I think it still remains true that inflation and the economy are going to drive what happens to rates, and the Fed's going to be a side player in this. So if people are expecting the Fed to bring rates down to 2%, they better hope again and think again, because it's not going to happen.
All right. So all those important comments coming in on what Fed may not do and the implications on the economy. All eyes would be on the FOMC meeting tonight. With that, we'll slip into a short breather on Business Lunch. But when we come back, we will get you